right, let's bring back in our guest who's been so patiently waiting in the wings. It's Ben Rand from Elwood, Nebraska. Ben, thanks for sticking around. Anything jump out at you when we talk about the livestock prices there?
I think the thing that jumps out at me the most, Scott, is, the catalyst for the last really bull market in cattle was the drought of 2012. That gave us that run up in 13, 14, and Q1 of 15, and then inevitably falling apart, beginning of the second quarter of 15. What is really interesting this time around, we have the drought of 22 that has really sparked this with pasture problems, corn problems, prices going up, people liquidating cattle herds, zero heifer retention really to speak of. We condensed that whole 2.5-year run up of 13, 14, and 15 into like 8 months of 23. Which has been awesome. We've set new contract highs, we've set records, but these are places that cattlemen have to be very happy, be rewarded for what they're doing. We're trading a pretty tight range, in my opinion, now on the cattle, believe it or not, of $7 range is tight on the feeder side of things, that 247 to 255 area. I think that's pretty well supported. I'm not bearish, but I do have to be realist about the upside potential here for live cattle. You're hearing, I'm not saying we're topped out, but we do have to be a realist. So we're trading numbers that we've just never, quite frankly, seen before, and they need to be taken advantage.
It smells like, if I could translate what you're saying, trailing stops are in order. I appreciate that. I gotcha. All right. Thanks for being on. That's Ben Rand coming to us from Nebraska. He's with Blue Line Futures. We'll bring it back here to, I almost said Chicago, but it's Nashville.
It is. We are in Nashville for sure. And you're talking about livestock. Our next guest knows a lot about that. We're talking about ranchers. They're always looking for